Hi, everybody. This is Jessica Stone at Stansberry. I'm here with Greg Diamond, who, of course, is the editor of 10 Stock Trader. And we want to give you a few things to look at and think about when you're watching all these stocks plunge. There are going to be some opportunities. We want to talk about some sectors where you can find them. Greg, take it away.
Thanks, Jessica. Yeah, there is a lot of volatility in the market. There are some stocks that are outperforming. The obvious is the consumer staple stocks. You know, everyone needs toilet paper and paper towels. So that's where you've seen the rush to Costco, Walmart, Target. And I'll stick with Walmart because we saw this same situation happen in 2008 when the financial crisis was at its peak. And, you know, Walmart had a huge run up. And we also saw that during that time, you know, it went to a point where, you know, it didn't make any more sense. And when things started to say, all right, you know what, the world isn't ending, you know, shares of Walmart actually came down a little bit. Now, I would argue that this is actually worse than 2008. So, you know, there's probably still some upside in Walmart, Costco. I would also look at Kroger. It's kind of hidden under the radar. That's had a move about 8%. It's one of the largest grocery stores in the country. You know, if you're going to dip your toes into these stocks, it's obviously very volatile, but, you know, keep your position size very small. At this point in time, with the meltdown that we're seeing, it's about capital preservation. You work hard for your money, keep it. There are going to be opportunities out there, but, you know, don't be a hero in this market. You know, you take some opportunities with some of those stocks and you're good. Another consumer staple that I really like is McCormick, the spice maker. This stock has actually been in an uptrend, if you can believe it, since 1980 and has not yet broke that, even with the volatility we're seeing.
Should we be looking at things like online delivery,
Sure.
Amazon, or some kind of robotic company or AI company right now? Because these are solutions to the problems that we're facing right now.
Yeah, and you know, Amazon is reportedly hiring 100,000 people to deal with this. You know, they've also said that they've run out of household items. So that's obviously a boon for the stock. You know, but Amazon tech as well, and they're in the cloud. So there's a lot of different things to take into account there before you get into a stock like Amazon. I would also look at the food delivery services. So all the restaurants are closed, but they're still delivering stuff. So Grubhub had a really good move yesterday. That's a good stock to watch. You know, and then in terms of, you know, kind of going away from just the food part, but what is the new normal now is like what I'm doing is working from home. So Zoom Video, ticker ZM, has also been a very good stock of late. Had a move basically from the beginning of the year from 60 up to about 120. So I think both in the short-term catalyst that we're seeing with obviously the volatility and people going home, did a lot of demand for that. And then it's also just been a changing trend in the workplace to begin with. And, you know, technology is not going to go away. This is part of our world. And some of the stocks like Verizon, AT&T, Cisco, I think some of these stocks are really going on sale right now. And if you look at it on a relative basis compared to the market, and some of their peers are actually holding in quite well. So you can pick up a good dividend, a good stock for a long-term hold that, you know, has use in terms of the technology that's going to be implemented going forward.